Hey guys, Tex here. Thanks for joining me. It is Thursday, September 19, 2019. So in this video, I'd like to go over a head and shoulders setup and how you could actually execute a trade like that. This was a trade that I had posted in the chat room over at Livestream Trading. I posted, I guess, about 5 minutes before the trade actually worked out, about the head and shoulders pattern that was developing on our intraday chart here on the SPY. So I will show you how I spotted that setup and executed the trade. Before we do that, just let's run through a little bit of technical analysis on the SPY, because I think it is notable that gives further conviction into a setup like that working. But when we look at the SPY, one of the notable things that I was also discussing the other day in the chat room is that we have been putting in these divergent highs. So if we look at our RSI, we're putting in lower highs here, as well as our MACD, we're putting in lower highs. But when we look at the price action throughout that time period, we're actually putting in higher highs. So this is what we call divergent highs, and we are starting to kind of stack up these divergent highs, which is notable, but not necessarily a trigger in of itself. What this means is if the price action is continuing to put in higher highs, but you're not actually seeing higher highs put in on other indicators such as these, or maybe even the oscillator indicator, it can be an indication of a possible trend change coming. But we don't want to necessarily put too much weight in that alone, because you can get divergence for quite a long time before any trend change occurs. But it's notable, it's there, and I wanted to kind of point that out. But when we look at our chart here on the hourly chart for the SPY, we've got this solid uptrend line here that was respected through late August and coming into September. Once we had this gap down day here, we managed to get back into the top of the trend line. Then we actually got a sell signal on the SPY here as we broke below the trend line. The sell signal played out, bringing us back down here to our next support level at 298.81, coming back up into the trend line and still rejecting it, or rather now rejecting the trend line on the retest, pulled back, and this morning, once again coming back up into the trend line. So one of the things that I posted as a possibility when we came into this morning, we were actually underneath the trend line. And then just right here in pre-market and coming into the open, we managed to get over the trend line. So with our all-time high just overhead, of course, we do have basically a confluence of resistance here. We've got the trend line and that all-time high. So one of the possibilities that I posted was a look above and then a fail. And that is basically when price action tries to break out, but it just can't sustain the breakout. There's not enough buyers there to see the breakout continue. And so you end up failing, and you can often get quite an epic fail with a liquidation break, which happens when you get buyers who are positioned poorly, who are essentially trying to buy the breakout, and when it doesn't get the continuation that they're looking for, they start bailing on their position. And we'll look at that setup actually here in a minute on a faster time frame. But this was one of the possibilities that I posted happening in chat today, and that's exactly what we saw occur. The other possibility was basically a look above, and then we see it pull back, hold a combination of our all-time high and the trend line of support, and then it goes. So I was definitely leaning more towards the look above and fail, just because of the fact that we do have this confluence of support, or resistance rather, up here. It's not just a simple trend line. We have that all-time high, which is, it's significant to note. Now, if we don't actually continue to pull back, because we can see that we actually have a little bit of a uptrend line here, right? And whether we hold that or not overnight, I'm not really sure. If we continue to break down below that, I'd definitely be looking for more sell-off tomorrow. But if we get back above this trend line, then we're going to be putting ourselves back up into this all-time high. And I think eventually it's not going to be holding us down, and we'll be able to break out above the all-time high. However, I just don't see too much upside, really, potential in the market, maybe a couple of percent. If we go and look at our daily chart, and I did discuss this in last week's market review video, this is the key thing that we're going to be paying attention to, is we have this megaphone top, this major trend line that has provided resistance for us. Now, it's notable here on the SPY, we didn't technically test it right here, but on the S&P index itself we did, and we can look at that here in just a minute. But if we actually zoom in on this and we see ourselves manage to get above this all-time high, I would be looking for this this top of the megaphone trend line to be our target for the next resistance. So that's going to be putting us up roughly around 305, maybe 306, depending on how long it takes to get up there. So if we get continuation, manage to break this all-time high, look for that trend line to reject, and then possibly a pullback. Obviously, first target would be that previous all-time high. Let's very quickly go and take a look at the SPX index itself, because it is notable. As I said, when we take a look at our megaphone top here, here we go, and perfect test of it here. Okay, so if we zoom in on that, that's going to put us, it's going to put us around 30.44, maybe 30.45, depending on how long it takes us to get up there. But it's also notable that the SPX, the S&P index itself, actually has not tested all-time high yet. All-time high on the index is 30.2798, and today's high was 30.2199. So we're still, we're still a few points away, but it's very, very close, right? We look at the NASDAQ. It also has not tested its all-time high, and in fact the NASDAQ looks a lot weaker. And that's another thing that I wanted to point out, is that I am noticing a lot of divergence in the market right now, not just with the divergent highs that I just discussed, but with some of the big name stocks. For example, Apple, that carries a lot of weight in the market. Today, when the SPY was actually bouncing off the VWAP and started to lift up pretty nicely, Apple just didn't care. It actually continued to sell off. So we're seeing that weakness in other stocks such as Amazon and Netflix. They've all been incredibly weak. So even though the market is up here at all-time high, some of these really big name stocks are just not really performing very well. Microsoft had a good day today, but it was news driven, but then it managed to sell right back off. So it's notable that we're seeing these divergences in the stock market here between some of these big name stocks and what the actual index is doing. So it's kind of one thing that Peter at Shadow Trader would say is you build all of this market generated information, and you construct your thesis or your narrative of what you think the market could or should do, and you use that information to essentially plan your trades to get a better idea of what the market is likely to do. That's the whole point of technical analysis. And you combine things like market profile and fundamental analysis, and you get a strong grasp of what is going on in the market and what should happen. So as I mentioned, it's notable. We have these divergences, and we're clearly struggling up here with this all-time high. We're coming into the weekend after tomorrow. So, I would be inclined to say that most likely we have a little bit more of a pullback. Maybe short-term traders who don't want to hold over the weekend and risk exposure to headlines would be looking to take profit, but we will see. So if we do pull back, let's zoom out on our chart here and take a look at some of the levels that I've got marked out that we would be targeting. First level here is going to be where we clearly had resistance and support all through here, resistance again here, and we recently came down and tested it, so we're looking at that 298.81. So any continuation to the downside tomorrow, 298.81 is realistically going to be our first target. Next one after that, we can see resistance here, resistance and support, and try to hold support here. That brings us down to 296.58. And then the ideal target for me is the top of the range that we were trading in throughout August, which roughly is around 293.94. We've also got the 50-period moving average from the daily chart sitting right there around the top of that range. So that would be an ideal setup. If we could get a pullback, I don't think it would happen in one day, but if we could eventually see the market pull back down here to the top of this range, that would certainly shore up the unsure footing of the gaps we left behind, some of those divergent points of control, and would give us a solid buy signal here that we could possibly look at getting back up through these levels. Really tight risk on a trade like that. So that's really what I'd love to see instead of the market trying to go for a breakout. So we'll see. I mean, obviously, like I said, it's essentially balancing up here, but these divergences and the way it's struggling up here kind of leads me to believe we get a little bit more of a sell-off. All right, so with that out of the way, let's go over the trade from today and show you how I spotted it and executed this trade. So I called it out on the SPY. You could have taken the trade on the SPY or the futures. The setup was essentially the same. So when we look at this, of course, we do have our all-time high marked here. All right, and so essentially what we did is we tried to push up over and then failed, tried to push up over again and failed, one more time and then fail. All right, so what we have forming here is really a picture perfect head and shoulders. You've got your first shoulder, your head, and your right shoulder And once that fails, you get that quick liquidation break. So how do you play something like this? So let's mark it out again. Our left shoulder, our head, and our right shoulder. And then typically what you would do is you would take a trend line and you draw it across the bottom of your head and shoulders pattern. So your trigger for this trade is when we break below this trend line. Okay, so once this trend line is broken with our head and shoulders pattern in place, essentially what we do is we short it, risking just over this trend line. Now in this particular case, we had our all-time high just overhead, so I was risking just off the all-time high. And this is a setup that, you know, not every head and shoulder setup's going to work, but when this particular setup being with the confluence of this all-time high sitting here, major trigger point, and the fact that we tried 3 times and couldn't get over and hold over that all-time high, that told me right there that this was not just any regular head and shoulder setup. It was a high probability head and shoulder setup. So that's your trigger point. When you break the trend line on a head and shoulder setup like that, you take the trade short, you risk just over the trend line. In this case, I was risking to all-time high. If you wanted to put a little more risk on the trade, you could risk to the next, or rather the previous lower high here. But for me, with this type of setup, especially with the confluence of the all-time high being there, ideally it wouldn't get above that. So I did not want to risk all the way up to that lower high. And we get the liquidation break just a few minutes after the trigger initiates the trade there. So I called it out basically. It was right here about that candle. I took the trade on this candle, and like I said, just maybe a few minutes later, we get that liquidation break. And the reason that this occurs is because you have longs, right, who see this breakout above all-time high. So they start getting in the trade looking for a significant continuation on a breakout. We break out again here, and you get more longs getting in looking for this to continue, looking maybe even for some short squeeze. But it fails. It comes back down, tries one more time, and this time it actually puts in a lower high. So the fact that it couldn't break out on this third try and puts in a lower high, that's a huge signal for longs to get out of the trade. And it's also a signal for short sellers to jump into the trade. So you get this rather rapid liquidation break. That's what causes that. You get longs that are positioned poorly. They're positioned poorly because they're up here looking for a breakout. And when it fails, what are they going to do? They're going to all dump out of their position at the same time. So you get that really quick liquidation break. That's what a liquidation break is. Okay, so how did I trade this on the futures? Let's go to my futures chart here. And we'll go to our 5-minute chart. And it's essentially the same thing. It's the same setup, right? We can see our our left shoulder, our head, and our right shoulder. The only difference is that the futures are not at their all-time high. Okay, so I do look at both the SPY and the futures when I'm trading futures. I trade off the futures chart, of course, but I do consider what the SPY itself is doing, because the futures are, they're an instrument for speculating what the actual S&P index is going to do itself. So when the S&P index is, the market is open, the futures are going to trade very closely to it for the most part. So when you see a setup like that on the SPY, you know that the futures are going to react the same. So there's our setup on the futures. We've got our head and shoulders, beautiful, draw our trend line, and we've got the signal right here on the break of the trend line. You take it on the retest and risk just above it. In this particular case, I just took everything off right here into our previous high of day red dashed line. So caught about 5.5 handles, almost 6 handles on the trade. So and instantly, just quick. So that's a great trade. I mean, in hindsight, maybe I should have left a little bit on. I definitely left about another 5 or 6 handles on the table. But when you get a quick resolution trade like that, there is absolutely nothing wrong with just taking it and running, especially in this market right now, because anytime you're trading near all-time highs, it can be very whipsaw action. So you don't want to really be too greedy. You take your money and you run. And that's really the most success I've had trading futures, is not being greedy more than anything. So as I said, the futures they're still a little bit a ways from the all-time high, not quite there. We can go and look at our daily chart real quick here. Let's see. There we go. All right, so our all-time high, this is the new contract that expires in December, so I'm already trading the new contract. The old contract expires at the end of this week. So the all-time high, the new contract is technically at 30.32 and a quarter, and today's high was at 30.13 and three quarters. So you see we're a little ways away from all-time high. Basically the same situation as we just saw on the S&P index itself. So, all right, guys. So there's you a nice little video with some technical analysis on the market, kind of what I'm looking forward to tomorrow, maybe even into next week. And more importantly, how to spot and trade a head and shoulders setup. And hope you guys found the video helpful. I appreciate you watching as always. Take care, guys, and we'll catch you in the next one. See ya.